3M could be creating a potential multi-bagger opportunity with a spin-off that they just recently announced. And that's what I'm going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in that chat. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel. Now, you guys know that I love looking out for spin-offs. And the reason why I like looking out for spin-offs is because this is one of those areas that could create huge returns for investors if they find the right ones with the right ingredients. And so 3M just announced a spin-off. And I do believe that this could have the potential to be very lucrative depending on how the share price trades once the spin-off company is public. Now, let's dive into it. So notice here's an article that came out recently where they said that 3M is expected to spin off its healthcare business into a new public company. And this announcement came alongside 3M's second quarter earnings report. Now, here's the press release that effectively talked about it. So they are spinning off that healthcare business, and they said that a spinoff of its healthcare business will result in two world-class public companies well-positioned to pursue their respective growth plans. Now, there will be new 3M, so that's just the existing company without the healthcare business, and then there will be healthcare, which will be their healthcare segment. And the reason why they're doing this is because they want the two companies to have better agility, focus more on capital allocation, and have better compelling investment profiles. I believe that there's two reasons why this is being done. One is to offload some debt, and two, it's to offload some potential litigation liabilities. And that's what I'm going to dive into further in this video. Now, let's start off with the litigation liability. The company's healthcare products also include the Bayer Hugger surgical warning system, which is currently the subject of nearly 6,000 lawsuits. And 3M maintains that the product has no relation to surgical site infections, but it's just something to be aware of. I suspect that due to the increased amount of leverage and potential litigation, the spun-off shares could face intense selling pressure, which at the right price could potentially create an amazing investment opportunity. Now, here's a little bit more on that litigation. So thus far, 3M has won one jury-decided case, which acts as like a bellwether in 2018. However, that does not mean that there cannot be liabilities resulting from the approximate 6,000 cases that are expected to go forward. So it's important for you, if you're looking to invest in this spinoff, to understand exactly what's happening. Now, ultimately, I do believe that there will just be a class action, but it's understanding what the potential liability from that class action could be and put that into your valuation when you're determining the valuation of the spun-off company. I just don't think we have enough information for that yet. We might in their Q4 disclosures from last year where they provide their 10K. So we might actually have some disclosures, but this is an ongoing issue. So when the new company is spun off, this is one thing to really look into. Now, what exactly does that new company spun off consist of? Well, here you can see the whole business for 3M. Their largest segment is safety and industrial products. Their second largest segment is transportation and electronics. Their third largest segment, which is a segment that's being spun off, is healthcare. And then finally, they have their consumer products segment. So they're effectively spinning off a material part of their company. But what does that material part of their company exist of? Well, you can see here that the largest part of that medical product segment is medical solutions. So that's wound care. That seems to be a legacy segment or a slower growing segment. It's growing at approximately 6 to 8% annually. The second segment that I do want you to focus on is their health information system segment. Healthcare IT is growing between 7 and 14% annually. The third segment that I do want you to focus on is on their biopharma segment. This is growing between 10 to 15% annually. So they do have a larger, slower growing subsegment, but then they have two faster growing subsegments that are relatively newer in the space, but could push up that overall revenue growth year over year. Now, this is the slide where I got those growth rates from, but the one thing that I will point out is that until they provide further disclosure and financial projections, my assumption is that this segment, or effectively this company, grows revenues at approximately 10% a year into the medium term. Now, here's some additional detail on the spinoff. So this company will be spun off with approximately 3 to 3.5 times EBITDA in debt. and will be positioned for rapid deleveraging. All that is corporate speak to the fact that they're leveraging up the spun-off business, which is typical in a spin-off transaction. Now, 3M will own approximately 20% of the company, which they expect to be monetized over time. So effectively, they'll sell those shares over time. But what this means is that there could be huge downward pressure on the stock almost immediately, as 80% of it is owned by shareholders who I do believe would not want to own a company that's levered up and has litigation liability. So I do believe that a substantial amount of the shareholders will sell this off. And how are they spinning it off? Well, you can see here that they're spinning it off in a tax-free distribution. And so the company expects to complete this transaction by the end of next year 2023. But note that 3M will retain responsibility for other healthcare related litigation, just not that one specific litigation item that I pointed out earlier in this video. So the question is, how does Wall Street think about this? Well, Wall Street is very neutral on 3M as a whole. We'll see how Wall Street thinks about the spun off company when it's available. But as you can see here, right now, 3M has 12 hold calls and only 2 buy calls. So they're not really super positive on the name. And 3M is effectively trading at 13 times 2023 consensus EPS. And so the neutrality by the analysts is very interesting to me, because note how cheap the company is. They're trading at just 13 times consensus EPS estimates. So that's not an expensive valuation at all. And what it does do is it calls for me to actually build a model on 3M, in addition to building a model on the new company once it's spun off. But you can see here that they are a free cash flow generating machine, and it's my suspicion that the new company will not focus on buying back shares or paying out dividends like 3M is. Instead, they'll be focusing on paying down debt, which is what they did disclose to us when they said that they're going to be focusing on rapid deleveraging. And so I do believe that this will not appeal to the current shareholder base, which largely looks to me like a dividend shareholder base focus. And so this, in my opinion, can create immense selling pressure on the stock, which will create an exceptional opportunity for value investors. So watch out for this. This does have the ingredients to be very lucrative for us. You got investors that are investing in 3M for dividends. They're getting this tax-free spinoff. It's not a company that they want to hold on to because it's focusing on rapid deleveraging. 80% of the shares are being floated. They will sell that as quickly as they can, causing huge downward pressure. And look, 3M could start liquidating some of their shareholdings immediately as well. So I do believe that there could be a potential opportunity here, and I will be looking out for it. However, that's not going to happen until the end of 2023, or so until 2024. So the question is, what other opportunities exist today? Well, you can see here that there's approximately 7 companies that are on the tracker that the Patreons get access to that are trading under 50% of their intrinsic value. And there's 20 names that are trading less than 75% of their intrinsic value. So there's lots of opportunity for investors in this environment. And hey, we might just get another opportunity with this medical business spinoff in 2024 that we can look forward to. Now, how do you get access to that tracker? You can get access to that tracker at the lower tier of the Patreons. However, if you want access to an epic live presentation that we have every month where I save my very best work for, you can get access to that Zoom call, a live Zoom call with me at the upper tier of the Patreon level. Now, another spin-off opportunity that I did discuss on this channel recently was the spin-off of Warner Brothers Discovery. And that actually created a very interesting buying opportunity. Now, I did say in that video that Michael Burry bought into it, but he has recently sold it. However, I'm still looking to purchase into this opportunity, and other investors have bought into it, for example, like David Einhorn of Greenlight Capital. So in order to get access to that video, click right here.